where is it that, I mean, in case there is a thematic note that you are writing or have written or what have you about 2025 and pockets that you might want to advocate based on the GARP principles that you might have, or where you believe that you genuinely have seen invested into it, because I was present at your conference, right? It was so well attended.
Yeah.
And even the companies, they were really large companies, obviously, but there were also these non-Nifty 50 companies, large enough, but not like mega caps from Indian parlance, right? So where is it that you believe there is heightened interest in this bucket that you spoke about? Not Nifty, not necessarily Nifty 100, but there is enough interest.
So if you look at themes, it can't be a 2025 thing, Niraj, right? You'll have to take a 3, 5,
okay.
6. So if you talk...
But you start in 2025.
2025, we can talk of cyclical stories. So we'll think, of course, you'll get a power up cycle, seasonal demand in April, May, June. And you'll have power prices going up, power shortages will go. It's predictable. It happens every summer. It'll probably happen this summer as well.
Okay.
We expect real estate demand to recover, for example.
Why so?
Pre-launches have been weak because a variety of reasons, right? Elections in Mumbai, etc., have kept launch momentum weak. We expect the launch momentum to start to go up again, and that should drive a renewed interest in the real estate stock also. I can talk about, let's say, at some point later in 2025, a peaking of credit costs, but that is an iffy thing at the moment, right? You can't really get very confident about it at the moment. We'll see how this plays out, right? Because expectations for banks are not very high at the moment. But if you take a medium-term view, there are many places where things are changing. Let's say the energy space itself, renewable energy, and the kind of investments and momentum we are seeing in some of the renewable spaces in India is very strong, especially if some of the storage solutions starts to work, then the whole game changes really in terms of energy generation and renewables in India. Manufacturing is working, but it's more to be approached bottom up. Which company is actually executing? There are companies which are successfully exporting. Again, there's no undiscovered stock now. Everything is fully valued and discovered, but you can still find those growth avenues in the country, right? So again, I would say that, look, thematic approach has to take a slightly more long-term view. We have cycles that are visible in 2025, which should start to go up.
Let me just quickly get this out of the way, and then we try and talk about what is it that you watch out for the most. I mean, one is obviously the Trump 2.0 era and what happens there, but beyond that, there will be other things. But just to wrap up this point, or circle the square, just say, or square the circle, if you will. So 2025, maybe look at power, because there is some demand that will come up, and real estate demand revival, if you will. So play the real estate demand revival as well as power via mainstream companies, which is power generation and real estate, or play via ancillaries? Well,
the direct companies are always the most leveraged to any theme, right? But if you can find something cheaper in an associated business, right? In building material, I don't think there is any cheap building material stock, for example, right? But if you can find, please do look at them. But the core theme is that real estate construction, real estate pre-launches should start to improve here on.
Okay, just one last question for 2025 on that. And there is a lot of talk of CapEx revival, right? So you don't want to play the CapEx revival theme at all, because it's kind of, in the last 3 to 4 odd months, it's been neglected a bit.
So there's 3 answers to that question. Okay. First, in the very short few months, there should be a significant acceleration of government spending.
Right.
If you look at the budget, 11.1 trillion rupees of budgeted capex, the implied capex for November to March should be up 61% YOY, because the first 7 months, the government has really struggled to get the money out of the door. It looks like maybe they will miss the 11.1 trillion target, but irrespective, there has to be significant acceleration. So you can see that coming. Everybody knows the math in the investing community. Everybody's thinking of what to buy. Why is it not happened already? It's the middle of December. When is capex going to start, etc. So that's the short-term view. The slightly medium-term view on government capex, Niraj, is that the historical performance of 30% odd growth YOY in government spending cannot be repeated.
Agreed.
Right? Because there is no fiscal room. Your revenues will grow in line with nominal GDP, and you can probably grow capex in line with nominal GDP or maybe lower, because there is the objective of bringing the fiscal deficit down. Right? So the overall momentum in government capex should normalize at a steady state here on. The third part is this entire anticipation that private sector capex is going to recover dramatically, right? That once the government slows down, companies will step up. And the reason for this is that balance sheets are very healthy. Most companies are sitting on no debt, right? 3 or 4 companies I spoke this week have promised not to have any debt in the future, right? Zero. Why? Right? And that's because of a risk aversion. You remember the IBC and the bankruptcy issues, etc. So you say, okay, look, I don't want any risk on my balance sheet. So that risk aversion is not changing overnight, one. However, if you look at total capex investment to GDP, that is not a bad number. Right? It was higher only in the post-GFC 11-12 period when we were building all those power plants, etc. So to argue that it will naturally go up because it is somehow low is not correct, because the investment to GDP number is not low at the moment. So it will not just naturally go up in sort of an automatic fashion.